Tax day is fast approaching, set for Wednesday, April 15th. That's next week. And if you haven't done your taxes yet, there is still some time. We are breaking down what you need to know and some resources available to you. UT accounting professor Derrick Bonyuet stopped by to help with some advice. Great to see you, Derrick.
Thank you, Mark. Thank you for having me here today.
First question, as we approach the deadline here, for the last-minute filers out there, what resources are still available to them that they might be able to tap into?
Sure, there are resources available, right? So the one that always comes to my mind is the Volunteer Income Tax Assistance Program, VITA, and that is a program from the IRS, right? And that program is managed by foundation communities, right, here in Central Texas. They got different locations, and that is where you can get your taxes prepared for free.
Oh, free helps.
For free help, right. So then basically the income limits, we're talking about $60,000 for individuals, and then for families of 2 to 4 people, $85,000. And then the income limits increase, right, if you have an additional member. Then the IRS, they also have the free file program, where basically the IRS partners with tax software companies, and then you can do your own taxes for free as well, right? And then basically income limitation is $89,000, right? So then basically those two programs are great, right? So then if you got something more complicated, you got the low income tax clinics, right? And here in Austin, right, the UT School of Law, right? They can assist you with some complex issues.
UT School of Law, always a good resource there for folks. We've seen a lot more reports of people turning to AI to do their taxes and putting the numbers through that. Tell us why that may or may not be a good idea.
Well, AI is amazing, right? We can do amazing things with AI. Basically, it's going to help you, right? Pull information very quickly, right? And then the reality is that at the end of the day, we need to validate that information, right? So then, obviously, we need to go back and try to trace that information to the official sources, right? From the Internal Revenue Service, the Department of Treasury, right? So that is something that you want to do on your own, right? And then, yes, there are some AI tools that are moving fast, right? There are AI tools that are going to help you, right? Collecting the data, helping the automated manual entry. That is great. But at the end of the day, remember that we are responsible for our tax return, right? So then at the end of the day, yeah, you want to be sure that human, right?
Right, judgment. Use that human element of it.
Absolutely, yeah.
You know, there's been a lot of changes with the One Big Beautiful bill that are now in effect for taxes. What are some of the key highlights that people should be aware of that came in that law?
You're absolutely right. The One Big Beautiful Bill Act introduced a lot of changes, good things, right? Like the overtime income exclusion, the tip income exclusion, the enhanced senior deduction, the child tax credit, right, from $2,000 to $2,200. All of that is great, right? I do believe that one area where people are aware, or probably people are not aware, or maybe they don't know how to apply that correctly, is the overtime income exclusion. And that is because it's not, to begin with, employers are not reporting that in a consistent manner. Hey, it's a new change, right? So don't blame the employer, right? So some employers, they are going to show that in the W-2 form, in box 14, or maybe some employers, they send a letter in addition to the W-2 form. Or maybe some employers, they're not reporting that at all, right? So then the second thing that you need to keep in mind is that is the overtime premium. That is what you are going to exclude. Let's assume that the hourly rate is $40, and you know that overtime usually is paid time and a half. So then basically, if an employee works an hour of overtime, $40 times 1.5 is going to be 60. What you are going to exclude is 20, the overtime premium, right? So then that is where taxpayers need to watch out, right? And because otherwise they will be excluding additional income, right? So you don't want to do that, right?
Biggest thing, watching out for that overtime and looking in your mailbox for those additional forms or letters that you say.
Oh yeah, no, absolutely, yeah. So then if for some reason the W-2 doesn't show anything, right, taxpayers can rely in the last pay stub from 2025, and that's where they're going to see the year-to-date compensation, year-to-date overtime, and then if they know that their overtime is paid on the basis of 1.5, then basically you may want to divide that by 3 to determine the overtime premium, which is what you're going to exclude, right?
All right, some helpful advice there, Derrick. Unfortunately, we're out of time, but I think what we get from this, a lot of free resources out there for you.
Absolutely.
And the clock is ticking.
Yeah. Yeah, move fast.
April 15th is the deadline. Derrick, thanks for being here with us. Appreciate it.
Thank you so much.